Welcome to Stock Market Investing with the ARMR Report. This is the morning call. Thanks for joining me, ARMR Insiders. As always, I'm sharing with you information that I use to manage my own personal capital, right? We have ARMR Investing Way. It's a three-stage process. We build our whiteboard. That's our fundamental research. We use algorithms to tell us when to commit capital. And we use stop losses to protect ourselves from ourselves. So what I'm sharing with you is what I do personally. You got to make your own decisions on what stocks you buy, as always. And so I hope that the ARMR Report you see as a guide, a big picture, this is where we're headed. And then you use those tools to build your own risk tolerance goal type of portfolio. All right. So having said that, let's dive into what this day means to me. Okay. It's Friday of Fed week. This is really what's important. I said it on Wednesday of Fed day and yesterday. The end of the week is what matters to me. That's the candle that's going to matter. Either we're going to have a breakout week and it's going to be a strong week and we're going to look at this weekly candle. And then what happens is over the weekend, all the institutional money managers who were reading through their notes, reading through their charts, sees that they're missing a major move up in the market. Things get more exciting next week. Or we have this huge reversal down today, and nobody feels like they missed anything and it looks like a top in the market. I don't know what it's going to be. There is so much noise in the market right now that it is deafening. The whipsaws, my thought today, and so I share this screen with you right here. Don't forget the captain's log. I write it every morning before I come talk to you. It kind of just, helps me put together my thoughts. And quite frankly, it's a very short missive today. There's just not much to say other than I'm frustrated. I don't know about you, but I'm frustrated. The last couple of months, unless you're just index investing, have just been a grind. And there's a couple of nice moves up. There's a lot of tiny fires that I keep putting out, which means stops are getting hit on new positions that I put on. And, of the three portfolios that I manage my own personal money, the index only portfolio is the one that works the best because the volatility, the fact of the matter is the volatility we're going through is just normal. So the indexes never really get stopped out while individual names implode. I mean, I was on that Twitter call yesterday, right? And thank God I didn't put Twitter in the ARMR portfolios. For those of you who followed me into the stock, I told you I have an aggressive portfolio where I put small positions on when I feel like I want to put a trade on based on what I think, okay? And I'm thinking that after that Facebook story, I thought, how's Twitter not going to knock the cover off the ball here? Well, apparently they didn't. The stock's down, 13%. I listened to the call. I really, at the end of the day, it makes me want to just go back to writing algorithms because when I listened to the Facebook call, I thought I should be selling this stock. I don't know why the stock's going up. And when I listened to the Twitter call, it sounds good to me. I mean, I get it that the numbers didn't blow the doors off, but if you listen to the call, they said that things were slow January and February, and they started to ramp in March. I mean, business is ramping. Some of the key metrics that I cared about from the Q4 call, they're delivering on. I don't really know why the stock's down 13%. It doesn't make any sense to me. But that's the market we're in. It's like part of the reason their forward guidance is a little bit light is that they're hiring at a very fast pace. So their expenses are going up a bit as they're expanding their business and revenue is ramping. I mean, that's just not a reason to dump the stock. It's just bizarre to me. Whatever. Obviously, this is why I really, for the ARMR portfolios and for the bulk of my assets, I use this three-stage process: build my whiteboard, use algorithms, use stops, and the purest form of that is when we get risk on green signal from the indexes, you put all your capital to work that week. Then ideally you stop putting capital to work and you just live with what you bought and see what kind of money you make on that run. And then you start all over again. And, what I've done here in the last couple of weeks is I get stopped out of some trades and I try something else, but now I'm getting stopped out of those. So I didn't add Twitter to the portfolios. I'm trying to reduce what I'm doing a bit and focus on the group ETFs, which those aren't working either, but obviously the volatility is less there. And we don't have a full position on those ETFs. And so I'm staying with those names for now. So let's just look at the market right now and how we see it. Oh, first of all, here's macro vision. So for all of you who are upset that you missed MVIS, you haven't missed anything. The stock's down 25% with earnings. Okay. So, I mean, there's just not a lot. This means KOPN will be taken out of the portfolio, by the way. And again, this is not in the ARMR portfolios. This is, I have a small position on KOPN, had a small position on Twitter, have a small position on OLED. Okay, but these are not ARMR portfolio ideas. OLED probably should be. I might add that to ARMR portfolios. But KOPN will no doubt be taken out, you know, with the collapse in MVIS. And this just goes right back to what I'm saying. There's just, you know, there's 1 or 2 days of up moves, and then, you know, the thing completely unravels. And if you remember from 2020, that didn't happen, right? You'd have a 20% up move, and then the stock would be up 50% in the next 3 weeks. I mean, we're just not experiencing that anymore. And so we've got to take a note. Okay, FISV, how am I going to handle this in the portfolio? It's going to open up, you know, down here below the 50-day moving average. I'm probably not selling it today. It's a secondary that they announced. They just announced and priced the secondary at 118. Now, it's selling shareholders, so that's not a good thing for the company. They don't get any cash for it. But the company is taking cash and buying 5 million of the shares and retiring them, which is good, right? When you retire shares, obviously the earnings per share. So if there's less shares and the earnings are steady, earnings per share goes up. So not a bad thing when they're retiring stock. I'm not going to be selling that right now. That's an artificial gap down based on a secondary, and we're going to see how the 118 level holds up. So typically the 50-day moving average is the stop. What's this low right here? That's 118.54. I mean, it's just coming right back down into the base. So I'm not going to be banging that out of the invest portfolio right now. We do have a positive earnings announcement out of all of that. By the way, we sold our Gilead yesterday. The stock's down 3%. You know, Bristol Myers, Merck, we sold all those. They're going lower. And the one medical stock that, you know, the big pharma that we held on to is ABBV, and the stock's up 2% on earnings. So go figure. The stock looks great, so we're not selling it. You know, I'm trying to, and this is something I wanted to say. I meant to write this down, and I'll put it in the captain's log to remind everybody. In markets like this, it's very important not to manage your P&L. You have to manage your positions. Okay? If you're having a tough morning, if things are difficult, and you look at your P&L and you think, I got to do all of this, it's just going to totally ruin your process. You need to say, the P&L will be what it is at the end of this cycle. I don't know what that's going to be. What I know is I have these positions on. These are my stops. If they get hit, I go to cash. If they don't, I stay with the position. That's it. And I've been what's the word I'm looking for? In the last couple of months, I've fallen victim to looking at my P&L on a daily basis. And so there's some days where I sell a bunch of things, a couple stocks hit stops, and then I sell others that haven't hit stops. And then 2 days later, those stocks are up big. Why did I sell them? Well, it's because I was looking at my P&L and I was trying to manage the risk in the overall portfolio. But when we take these positions and put them on and we know what the stops are, you step away and you just manage each position to its completion. Okay, so I'm just reminding you that I try to keep these comments in the captain's log as real as possible, right? I said it's like, you know, the captain's log is going to be just a frank discussion of my successes and my failures, and hopefully you can learn from what it is I'm doing, learn when I get it right, and learn from my mistakes. And so don't manage your P&L. Just manage each position on its own to completion, okay? CVX, I'm not too worried about, you know, CVX. I mean, we bought it after earnings. You could have bought it after earnings. You could buy it, you know, whatever. I mean, the stock is down a little bit with earnings, down less than 2% now. The stop is 100. The stock is in this perfect pattern. Exxon's going up. Chevron's going up. I think Brian makes a great point. The tighter they turn the screws on stopping energy companies from discovering energy, the higher the price of energy is going to go. And there's a big gap between the energy economy now and future, EV type energy. And between now and then, that gap in a inflation-driven market, you're going to see prices of energy go a lot higher. And we're going to pick up a fat dividend in Chevron as long as it stays above $100 a share. So I really don't care what it does this morning. It can whip around all at once. If it stays above 100, I stay with it. Okay.